It's a good thing.
That's finally a relief.
He was sigh of relief, but earnings have not gone in the right direction, right?
Yeah.
I think that is a worry, really. Let's actually quickly run our viewers through, a couple of points which basically help, get us a sense of what's happening right now. The mood is actually pretty somber out there, and I think it's been that way for the last couple of weeks since the budget actually, and no clear sense of direction, and unable to break out of the range as well. So those are the three things which kind of define the market mood. Both local and global cues are also largely unsupportive, and I'll get to both. So earnings is the number one thing. So if you take a broad basket of, say, the NSE 500 companies, X of financials, right? Companies have seen X financials, and that's the bulk of it. They've seen profits drop 12% on a year-on-year basis. This is broad-based data, and I and Nigel will put more data to this effect a little later. In terms of the global stuff, right? I mean, it's confusing. Data is all good, but is that meant to be good for markets also, or is meant to be bad for the markets also? And there the conclusion is flipping. Sometimes it's good, sometimes it's bad. And that's why I'm saying it's a bit confusing. So let's take the help of what prices are doing really. So US yields have run up quite a bit, right? I mean, about 50 basis points in the last 6 or 7 trading sessions. I'm talking about the 10-year. The dollar is the dollar index, a broad measure, is back at 104, which means it's now erased all of its losses this year. It's come back very, very strongly. So just two things. On the S&P 500, on Thursday, we saw a close below 4,100. 4,100 is a key support level. It's a bit of a battleground area. A weekly close, which is this today, Friday session, a weekly close under it, I think will get a lot of people to wonder whether downsides are opening up. The 10-year, as I said, has already surged quite a bit, but I think if it breaches 3.9 on the upside, it would suggest a return to the high of 4.33 from where we saw a massive fall. It's not very far, by the way. Here in India, the Nifty is basically, after Friday, fallen back in that range. The range is that budget day candle, right? I mean, the high was almost 18,000, the low was 17,350 or so, and we are back within that range once again. Bank Nifty never managed to break out of this range like the Nifty, and that remains kind of range bound. For the 12th session, the Bank Nifty is spent in that 1st of February candle that we saw. It was a very large candle, of course, very large volatile moves, but that's what we've seen both on the Nifty and the Bank Nifty. But Nimesh, you pick up a lot of stuff with your conversations. What's the latest?
Actually, I'm not too disappointed with this week's market. If you look at the market, we've been consolidating with a very narrow range. But the good part is there is leadership back in the markets now. So Reliance has helped the bulls, ITC helped, and finally we saw some moves in the technology stocks as well. So there is clear leadership. That's part one. The other part is at the margin, the FIs have turned net buyers for India. Even if you exclude the large block deals, effectively they were net buyers in the cash market, and that was a positive sign according to me. The other important thing, since we had a lot of conferences this week in India, and there was a lot of chatter from the larger FIs as well, the broader context is India's premium valuation is now narrowed to China for two reasons. One, India has underperformed, and China has seen a big outperform in the last 6-8 months. So now the valuation premium is at a 10-year average, which is not bad, which means that the tactical trade of India to China is now largely over. That was a key takeaway when I spoke to some large FIs who came to India this week. So that's on the positive side. The supply overhang is going to be a key thing to watch out for. We saw this week large block deals, Coforge 10% equity changing hands, Interglobe 4% equity changing hands, and the overall feedback is that trend is likely to continue. So I'm expecting more block deals coming in next week as well. So that's something need to track on. But as I said, given the global perspective, India is relatively better this week. The other niggling factor apart from supply was the fact that the new margins which came into effect from this week, that is impacting a lot of activity from HNIs and retail investors. That's the overall feedback. I spoke to a lot of brokers as well. So that, I guess, will take some time to stabilize. So that's something to watch out for. But at the margin, the FIs have turned buyers, and the fact that India has relatively been in that range is not bad, so to speak, given the global perspective. So that way, I'm saying it's not been a bad week for India.
The froth has been taken off, right? I mean,
yeah.
So maybe a little bit more, but the large excesses have been taken off. Let me just, guys, run through the earnings, right?